Hi everyone, this is Caroline just with an update from Summerhill Financial Services. Taking a bit of a bent towards portfolios this month. There's been a few things that Alex and I have been focusing on. The first thing, as you're probably all aware, there's been a really strong increase in markets. It's been in the media a little bit over the last few weeks. So at the moment we're really holding off on making any recommendations in relation to share or property type investments. As you know, Alex and I generally make those recommendations when we feel markets are a little bit softer, but they've gone really quite hard and strong at the moment, so we're just sort of taking a break from that at the moment. However, what we have been looking at in a little bit more detail is the cash and fixed interest component of portfolios. As you may know, we look at portfolios and returns every single month, and that's something we do as just part of our process. And we're in a situation, and have been for a little while now, which is what's sort of making us look at this much more closely, is where with interest rates and bonds, returns are actually quite low. One of the benefits of getting older is sort of seeing this happen before, and this hasn't happened for about 12 years in terms of where interest rates are so low. Now, as you know, and as we sort of try and remind you from time to time, is we like to take the risk in your portfolios through the share and property type investments. So from our point of view, the cash and the fixed interest that you hold in your portfolio is purely for defensive purposes. We don't like to take risk in that part of the portfolio, which means returns are always going to be much lower, but it's really sort of that defensive component. Having said that though, even though we don't like to take unnecessary risk in the portfolio, we still do want to maximise return where possible. So one of the things that we've been assessing is, are we comfortable with the fixed interest strategy that we have in the portfolio? Do we need to make some changes? And what we've decided on this week is really just sort of pulling back a little bit from fixed interest. We still really like the funds that we use, but we're actually going to be taking a much stronger position as part of the total fixed interest and cash portfolio with term deposits. It gives a much more secure return, or a much more certain return. Still not high, but still gives you that secure return without taking on a little bit of extra risk, which comes through a fixed interest portfolio, which that little bit of extra premium, which we normally expect from fixed interest, just isn't there at the moment. So you'll probably see some recommendations from us over the next couple of months, and certainly as your planning meetings come up, just in relation to reducing your fixed interest exposure and putting more into term deposits, anywhere from maybe 6 months to 12 months term deposits. This might be something that we only do for 6 months or so. It will depend, as I said, we still look at portfolio returns every month. So when we're more comfortable putting more monies back into fixed interest, where we do normally expect a higher return, then we will sort of continue to do so. So nothing that you need to do at the moment, just to give you a little bit of background as to if you see some changes in the portfolio, where those, the reason for those changes, and just the fact that Alex and I have spent a little bit of research in relation to looking at fixed interest, including higher risk fixed interest securities such as hybrids or lower rated bonds, but we still adamantly believe that it's not worth taking that extra risk in portfolios. What we're really trying to do is, even if we can just generate an extra 0.5% return on the fixed interest component of the portfolio, it all makes a difference in getting to your end goals. Naturally, if you have a relatively small cash or fixed interest exposure, if you're sort of in the accumulation mode and you're sort of much more focused on growth, then this won't impact you so much. But of course, for some, we're much more concerned about protecting the wealth that you've accumulated, the fixed interest and cash strategy becomes much, much more important. As always, any questions or comments, please let me know, but I'll be seeing some of you in November when I'm back for a couple of weeks soon. I'll speak to you later. Bye-bye.